In last week's podcast, I gave you 8 stocks that had flashed short-term buy signals from a new build system. And in this week's podcast, I will tell you how it went with the 8 stocks. And as you know, I said I would buy into 2 of them, which I did. But the main focus will be on Wednesday and Nvidia's quarter results. This and much more. You are listening to the StockInvestor.us podcast, Trading Tips with Jim, as we're heading into week 9. And as I told you, I would buy 2 of the 8 stocks that flashed strong buy signals. So I did. I bought into Weibo and I bought into Go Health. Weibo ended in plus, Go Health with minus 5.35%. But I will give you the results for all the 8 stock tips. You just have to stay tuned a bit longer. Remember to subscribe, like if you like the podcast. Of course, that will help it grow. This week is a week where the main focus will be on Nvidia coming with quarter results on Wednesday, and then there will be personal consumption expenditure numbers on Friday. These are maybe the most important economic data that we will see this week. There will be some other stuff, but all eyes will mainly be on Wednesday and Friday, alongside a few other quarter results, which I will get back to in just a minute. The bigger picture is exactly like I told you it would be. Now we have a new president. You'll start to see different numbers coming in, and inflation is one of these numbers. I told you also last year and even year before that we were not done with inflation by any means, that inflation would be much more sticky than people think. And exactly that is what Fed is saying, that we cannot lower the interest rates before we see inflation go down. But my personal opinion has changed a lot. You have a new president in the United States, and right now it's a lot of fear-mongering in the media. It's a lot of things taken out of context. People are not able to see the big picture. But I am pretty sure that very shortly, not in the very first few months maybe, inflation will go down. The argument is that inflation will go up due to tariffs, but not let it. We will see who will be correct. As you know, we're able to pick up inflation long before it even happened. It has to do with the longer lines. And I feel very, very certain that inflation will go down. One of these metrics is the oil price. Oil representing energy. Oil is very easy to follow. $70 down $1 last week, or 1.43%. Oil keep falling. And I'm pretty sure oil will continue to fall. And if there is brokered a peace deal, then gas will start to flow even cheaper. And that will cause energy prices to fall quite rapidly. And almost anything we do is related to energy. Either it is mining bitcoins, producing rubber toys, driving cars, whatever it is bound up to energy. And my bet is energy again will be cheap. But there is a few hurdles, and it's okay to mention these as well. We know that over the last few days we can read a lot in media what is happening. United States made it clear that they want peace in Ukraine. Russia says the same thing. We want peace. And then there is EU. EU and Europe as general doesn't seem to want peace. Actually, they are trying to put up enough money for Ukraine to keep the war going. But we will see who will be the more mighty one in these things. These are the things that can, out of the blue, ruin everything. Because if we look at the big lines, there is a fair chance that we are heading into a golden age in the Western Hemisphere. With new growth, new technology, a lot of good things are happening. It's a few hurdles left, but good, strong signs are there. And having done this podcast now for 5 years, telling you everything I did and doing and how I was planning and why I went into gold and all these things as a safe haven, because of last elections and how Europe was developing all of these things, I am changing my view. I told you that the last podcast as well. I'm slightly getting out of gold. Was in gold, bought gold at 1,600. Now offloading around 2,900 plus. Currently gold is at 2,959 and I think it will break 3,000. So I offloaded a little bit last week. I will continue to reduce my portion in gold because I'm a very, very strong believer that we are heading for different times, and then there will not be the need as such for items like gold. I think high risk items will go up. Slightly changing my trading strategy, and I am building up a little bit more on the high risk new tech side and into a few other things, because in my opinion, like remember maybe if you follow this podcast, that I went into oil long before oil went up, because I told you it has to go up with all these kind of politics that we saw back then. Energy would just skyrocket, inflation would go up, war will come in Ukraine, which sadly happened, and all these things. And I positioned myself in war-related stocks. Now I'm changing all the portfolio. I am absolutely revamping towards what I believe will be the new station. I want to be before the trend happen. And in today's 8 stock tips, because I will tell you what happened in last week's 8, not stock tips, but stocks that gave buy signals. As I said, it was very interesting because it's a new system, so we'll have to tweak it, follow it, see how it does. So I'll tell you how that went, but I also have 8 new stocks that is flashing buy signals in short term. We're talking short term here, let's say anything from 1 to 3 weeks. NIO is actually one of them, and as you know, I am in NIO in the $1,000 challenge, and I also have quite nice personal position as well, much bigger than the $1,000 position in NIO. I think electric vehicles, EVs, will have the rebounds. Charts are telling me the same thing, but we will see. Anyway, let's slightly get this week, what is happening this week, sum it a little up before I will give you the 8 tips, and we'll get to the $1,000 challenge at the end of the podcast, not trying to make it such a long podcast. And as I said, oil down $1 last week to $70. Gold going up $48, ending the week at $2,959, but was a little bit higher the week before. 10-year treasury yield, and this one is so important. Mentioned it all over again, multiple times in almost any podcast. 10-year treasury yield is going down. It went down by 1.58% last week to 4.42. This is absolutely a good thing, because when this goes down, stock market usually goes up, and it indicates that the professional, the real pros with all their huge teams are thinking that things are about to change, that is less risk in the market. So media may say one thing, and you will read page up and down about all the Karen screaming. And headlines, etc. Just, as I said, read a lot of news and read behind the news and look at the motives of what they are saying. Professionals seems to believe, like I do, that things are getting slightly better, and 10-year treasury yield is going down. Nasdaq and Dow Jones did not have a good week last week. They fell by 2.51%, both of them. Nasdaq ending the week at 19,524, not able to break up about 20,100 points. Actually, it's the third top, more or less at the same level for Nasdaq. Now it's moving within a rectangle formation, where the lower end is around 19,200, the upper end is just about 20,000. If it breaks any of these levels, either up or down, it should move close to 1,000 points, meaning that if it breaks up above 20,000 points with some significant, it goes to 21,000 very fast. And if it breaks below 19,200, it's a fair chance it will fall all the way to 18,200. Relative strength index is falling, lots and lots of support below last week started okay, and then we had a very, very bad Thursday and Friday, and that caused for the fall. High chance that the support levels will pick up, as I told you also in last week's podcast. Tons and tons of support under today's levels argue that this will hold, but currently Nasdaq is flashing sell signals from the long-term moving average and the short-term moving average. The relation between them is still positive, so there is still a long-term buy signals from the relation between the short and the long. This week will also be a lot of quarter results, Nvidia being the one on Wednesday, where Nvidia is expected to have or showed 84 cents earnings per share. I think it was up around 70% additional revenues to 28 plus billion dollars. Can you imagine the amount of money they are making? All eyes will follow these things because now that's where it is. The big seven, and if we exclude Nvidia, they haven't had their best year so far. Nvidia was pulling quite much last year, and Nvidia speaks for all this AI in many ways. By the way, C3 AI will also have their quarter results on Wednesday. But let's just go through the week very quickly. Monday will be diamond-backed energy FANG for those who follow that. It will be Zoom. And I would not invest into Zoom because what is happening, it's very hot in US right now, but also see it in Europe, is that all the remote work is changing. You can, and you can argue whatever you like, but the tendency is that people will go back to their workplaces. Private sector, of course, has to do it because they don't have the same rules as public when it comes to how to deal with expenses. But we see it in private sector that people are returning back to the work, and the same thing is happening also in public sector. And then you can argue, Zoom made its huge life during the beginning of COVID. What is the future for Zoom and Zoom valuation? I'm not sure. It's the kind of stock I would be into right now. Tuesday, AMC. First Solar, very interesting here. First Solar, because I think that we are maybe close to some bottom. All these things about energy, they will change, and in danger of repeating myself, as you know, I said in the very beginning, many years ago, maybe 4 years ago, when EV was hyped up to the sky, and we had NEO at $60 and everything was now about EV. I told you I am not buying EV because it's doomed to fail, because it was not ready as technology. It was not ready. It was just pushed by the left-wing agenda and the wokeness and all of these things that have damaged both Europe and the West highly over these years. Now I am picking up on all of these things which I said I would avoid like the plague. I'm picking up all of them because during this time technology has improved, everything has improved. Charging stations, battery length of the EV cars. You can get an EV car now going 900 kilometers in one charge, which is as long as the cheapest or most fuel efficient car goes. So we are absolutely talking huge changes there. And I cannot see fossil cars being the future, even though I love fossil cars. I do not believe it's the future. The future is electric, semi-electric. Even Toyota, which was the last one to go into EV, is changing their position into EV. That is why I am thinking there is such a huge upside in EV. And I'm early in. Yeah, I can wait half a year, I can wait a year, I can wait 2 years. If I'm right, I think the reward will be strong. And Lucid will also report their quarter results on Tuesday, along with Workday. Wednesday will be Nvidia, as I said, the most important thing, and we have C3 AI, and we will follow up with Advanced Auto Parts and Salesforce. Thursday there will be jobless claim numbers, and then there will be SoundHound AI and Clover, interesting one. Friday, as I said, personal consumption expenditure numbers will be the main thing. Expected to come in 2.6%. If, and I'll just put that in parentheses, no, if we get a peace, and there's a high chance that there might be peace in Ukraine already this week, maybe next week, at least very strong signals about peace, energy should flow very nicely back to Europe, very cheap. Sad for Norway, who has been making a lot of money on the Ukraine war, but now we are handing fist overhead money to Ukraine. Maybe of guilt, I don't know. But sad for Norway, because Norway made such money on energy and weapon as well. Believe it or not, peaceful Norway raking in money of war. So maybe not so strange that there is a lot of pro-war people in Norway. Anyway, it will be sad for Norway, but it will be very good for Germany and Europe in general to get cheaper energy back. Makes for a competitive edge, and when these things happen, if they happen, that we get into peace, we start to see energy flowing back, prices will go down, because some of these prices are artificially high. But I come again, things can happen. Before we get to the 8 stocks previous week and the 8 new ones, and end with the $1,000 challenge, just let's look at the buy and the sell signals. And last week it was 30% across all the tickers that we analyzed. This week only 27%. And Nasdaq has fallen down to only 10%, which is very, very low. The lowest we had it in this series ever was 7, and then I said just buy for whatever you can, because no, this is the buying opportunity of life. Now we are at 10, very, very close to the lowest I have seen. Only 10% of the Nasdaq companies flashing buy signals is a very, very good sign, because at some point it turns. But at the same time, this is the level where fear is very, very high, and in this scenarios doesn't take much to have huge falls in the market. Can suddenly easily fall 3.5%. If UK or someone else just say, no, we will send soldiers to Ukraine, we will follow up with money, we will not sit on the sideline waiting for US, Russia and China to agree on the future of Ukraine. We will back up Ukraine, and Zelensky says, no, let's do it, let's continue this war with more effort, then markets will come crashing. Or even if Nvidia for some reason doesn't do what it's supposed to do, or CEO says something really bad about the future, these things can cause huge crash in market, alongside with, of course, many other things. And being at a very low level of buy signals mean there is a lot of fear in the market, and then you can have the huge fall. At the same time, these are the levels where it typically turns, and it's sometimes good to do the opposite of the flock. That's usually what I do. I go opposite of the flock. When everyone is selling, I start to slowly buy up, and when everyone is buying, I slowly start to sell. Being down at 10% for Nasdaq is indeed very, very interesting thing. Will be very interesting to watch what will be the next. Nasdaq, New York Stock Exchange down from 27 to 21, while London at 28, Frankfurt at 44. We have Shenzhen in China, we have Tokyo, 32. Shenzhen in China 42, and we have National Stock Exchange of India at 7% buy signal. Nasdaq is the one that is the most beaten, and the rest of them are, I would say, somewhat okay. But again, some of the reason why these is because the big sevens haven't performed as good as they have been for years and years. They had a slow start on the year. 19 minutes into the podcast, we will go straight to the 8 signals that gave buy signals last week. Before you will have 8 new, and then I will give you the $1,000 challenge. And what a flop it became, because from the 8 buy signals I gave you, only 2 stocks managed to go in plus. The rest fell, and the average return, if you have invested the same amount of each of these stocks, would have been a fall of 6.16%, minus 6.16%. That is absolutely not nice at all. Meaning if you bought the stock on the opening on the Monday and you kept it all the week, not having stop loss or nothing, we're just talking just a week over the week, just having something to edge. And Celesta, for instance, Celestica did 10.92% backwards, minus 10.92%. Fall from Celestia, starting the week at 132, ending the week at 119. PTC down 5.78% over the week. TVGN, Tevogen, down 9.54%. Go Health, which I invested into, down 5.35%. Currently sitting in Goku, by the way, and Weibo. I bought Weibo because that was, in my opinion, the one looking the most solid. Started the week at 11.21. I got it a little cheaper actually, ending the week at 11.34, up 1.15%. Ata Inc. 88 down 15.58%, and Faraday FFE, which is someone commented on the YouTube that no, this is absolutely shit stock. Totally agree to that, but Faraday was the one of two stocks that managed to go up. Started the week at 157, ending the week at 160, up 1.88%. Tesla didn't have a good week, down 5.9% down for Tesla. So these short-term buy signals, which was consisting of a lot of signals, and by the way, I'm tuning this system. I expect it to be better and better. The system has to learn a little bit. It's totally new, and I just mention it because I know you like to have that sort of information in the podcast. Doesn't mean that you should buy them, by the way. I'll just tell you how it goes. We will look together, follow it week by week, and see. And here are now 8 tickers again. CME, currently at 248. CME is flashing a lot of buy signals. I checked the chart. I don't know. The trend is not very good, but no, I'm not sure how it can do much more than it is, but no, come again. And then Weibo continued to be flashing the same buy signals, high score again. 1134 is the current price for Weibo, so Weibo is again back on the list of stocks flashing buy signals. OPK 168, BBIO 685, also flashing a lot of buy signals. BSUN 373 is flashing a lot of buy signals. Pulmatrix PULM 892 is the price of Pulmatrix, also flashing a lot of buy signals. Then NEO is on the list. NEO currently sitting at 444, same like it had ended last week. Also flashing on the same list. And we find another one that we know from before. Tesla is also flashing a lot of buy signals. Doesn't mean it will happen. You saw last week's 8 signal had an average loss of 6.16%, minus 16.16%, mainly driven by the huge loss in Ata Inc. And normally you wouldn't trade like that because you will have stop loss, so things will be looking a bit different. No, but still only 2 out of 8 stocks managed to go positive. But if we look at market as such, I think 80% of the stock lost value at Nasdaq last week, and Nasdaq itself was down 2.51%. No excuse there, but it was absolutely not what we want. Will the 8 tickers CME, VB, OPK, BBIO, BSUN, PULM, NIO, Tesla, will these 8 ticker stocks be able to do better in the week to come? they all are giving, as I say, a lot and a lot of buy signal. Doesn't mean it happened, because if market goes down, like I said last week, everything will get pulled down usually. But there you have them, 8 news, and if you like this, just tune in next week, because then you will know what happens with the 8. Before I leave you, the $1,000 challenge, where I invest $1,000 and try to grow it as fast as I can. And when it started, it was a flying start. I did very, very good. But then it has been such a slow ride since, and I went into NEO many weeks ago at 510, because I have huge belief that NEO will be able to go up. And in the $1,000 challenge, I don't go safe, I go on high risk stocks, because I want high, fast movements. And before, while I still remember it, when sell signals are as low as they are in several stocks, expect increased volatility. I didn't say that, just means that a lot of movements up and down. Very, very nice if you're a day trader. Anyway, NEO ended the week at 444, the same like the week before. So no changes in the value of the $1,000 challenge that currently sits at $2,539.60. It's the exact same like it was last week. So $1,000 has grown to $2,539.60, but we want much more. I want it to be at 10,000, not at just a slight double. We were up at almost 4,000. Few bad trades, and there you go. Now it's again back. But with all the buy signals in NEO, hopefully this will be the week for NEO. I do not know. We can be even worse in it, because right now NEO is down 12.94%, and I don't keep the stop loss, which I should. Probably will regret that heavily. But again, this is high risk portfolio. I think I said all I wanted to tell you in this week's podcast. I hope you like the podcast. I hope that you will subscribe. I hope that you will push the like button in the YouTube video. And I hope that you will be back next week, of course. But more than anything, I hope that your portfolio will be much greener by the end of the week than in the beginning of the week. And that you just will have a super week. Bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information, you agree and are held liable for your own investment decisions.